Making profit in share market is easy. Yes. You too can make profit in share market even if you are just a beginner. Want to know how? Start with learning some basics about the share market and watch this video till the end. Hello and welcome to Nifty Indicators, a virtual academy where you will learn to study, analyze, trust and follow technical indicators and make profits a daily routine. In this video you'll learn the basics of share market, which will be the first step in your financial journey to start making profits easily. So let's begin. Understanding the basics of share market for beginners. Have you ever heard of anyone driving a car or flying a plane or any other vocation without learning? So naturally, understanding the basics of share market is very important to make profit. And you get to decide how much profit you'd like to make and then start working towards it. Now that you've decided to embark on this profitable financial journey, let's start. Introduction. Just as a fruit market is where we buy and sell fruits, a share market is where we buy and sell shares. There are mainly two stock exchanges in India: Bombay Stock Exchange, BSE, and National Stock Exchange, NSE. BSE has 30-share benchmark index called Sensex and NSE has its 50-share index called Nifty. For ease of learning, let us talk about Nifty. But, before proceeding to Nifty, let us first understand what is a share and a share market. What is a share? As we know, there could be businesses with different kinds of ownership: proprietary, partnership, HUF, trusts, public sector company, government-owned, private limited company, public limited company, etc. Share market basically deals with public limited company which raises funds from the general public by way of issuing shares to them. So, a share is the proof of a small part of ownership of any company acquired by you. As it is difficult and inconvenient for a single person to bring all the funds, the company initially raises the funds by way of an initial public offer or IPO. The total capital is divided into a number of shares, sum total of which is the share capital of the company. And the smallest part of that share capital is individually called a share. What is a share market? After the IPO, the company registers its share with the stock exchange where the shareholders can buy and sell the shares in share market. For example, let's say the total issued capital of a company is 100 crores and they are divided into 10 crore shares. So 10 rupees becomes the face value of the share. If they are offered to the public at a premium of 90 rupees, then the offer price is 100 rupees, 10 plus 90. After the IPO, the shares are listed on the stock exchange at a price which is known as listed price. After that, these shares can be traded in share market, for which one needs to have the below accounts linked to one another. Bank account to pay and receive amount. Demat account to receive and deliver shares. Trading account to buy and sell shares. Trading. Now we come to the crux of the matter, that is trading. The buying and selling activity in the share market is called trading. As there are thousands of shares listed and traded in the share market, the overall health and prospect of the market is gauged with the help of the index. In case of NSE, it is Nifty. Other than IPO, mainly trading can be divided into two parts: A. Cash segment and B. Derivative, FNO, segment. Cash segment. In cash segment, we can do day trading in any share in cash, margin, or margin plus. We can take delivery of the stocks, shares, for short-term positional trading or for the long-term investments. Derivative, FNO, segment. While in cash segment, we can trade only in stocks, in derivative segment, we can trade in stocks permitted in FNO as well as some major indices like Nifty, Bank Nifty, Nifty Financial Services, Nifty IT, etc. What is Nifty 50? Nifty is a diversified index comprising of 50 component companies from 13 different sectors. Finance and banking has the highest representation with 37%, followed by IT with 18%, oil and gas 12% and FMCG 11%. What is spot price? The current price at which a share can be bought or sold in the marketplace. What is market capitalization? Market price multiplied by the number of shares of the company. How is Nifty Spot calculated? Nifty is calculated with the free float market capitalization weighted method. Based on the price of the 50 components, Nifty Spot price is derived on real-time basis with the free float market capitalization weighted method. In this, the level of the index shows the total value of all the shares that are the components of the index at that particular time, compared to the base period November 3, 1995, Nifty 1000. Till 3 November 1995, full market capitalization was considered. And since 26 November 2009, free float method is used for weighing the index components. Market capitalization is market price multiplied by the number of shares of the company. Base market capital of the index is the aggregate market capitalization of each scrip in the index during the base period. Here's the formula for reference. Presently, Nifty 50 full market capitalization is around 132 lakh crores. Of course, that is much lesser than the market capitalization of a single US company like Apple or Microsoft. Futures and options, FNO. Futures as well as options, both are not direct instruments. They both are derivative tools. Meaning, they are derived from share or indices. Futures is like advance booking by making an advance part payment. That is, when we buy or sell futures, we are buying or selling the instruments. Only the partial payment is made now. But we are obliged to make the balance payment and take delivery on or before the due date, that is before expiry of the series. End of day each day, we are obliged to pay or receive the difference between our buy or sell price and that day's closing price, that is marked to market or MTM. Options, on the other hand, is more like token money given to the option writer and we may or may not exercise our right. That gives the buyer of the options the benefit of right but not the obligation. As such, an option buyer's maximum exposure and liability is limited only to the option price, which he has already paid. Whereas, his opportunity to profit is unlimited. Hope you enjoyed this video and have understood the basics of share market. For more information, please do not hesitate to reach out to us at 93726722102 and visit our website www.NiftyIndicators.com. Please note, we do not provide any kind of tips to buy or sell in the financial market. Before you leave, we'd like to know how much profit would you like to start making in share market? Do let us know in the comments below because we'd love to hear from you.